Why are wealthy global investors abandoning America for Singapore? For decades, the American dream wasn't just for ordinary people. It was for billionaires too. If you had money, power, and global influence, chances are you parked your wealth in New York real estate, US stocks, and Silicon Valley startups. But something strange is happening. In the past 5 years, an unprecedented wave of the world's richest people have been quietly moving their money, and in many cases, themselves, to a tiny island nation in Southeast Asia. Not London, not Dubai, Singapore. It's politically stable, has zero capital gains tax, and is now ranked the #1 wealth hub in Asia. The shift is so big that private jets from Los Angeles, Geneva, and Hong Kong are increasingly landing here, not at JFK or Heathrow. For most of the 20th century, America was the gravitational center of global wealth. If you were a millionaire in the 1980s, the roadmap was simple. Buy property in Manhattan, open a brokerage account on Wall Street, maybe invest in a tech venture in Silicon Valley. America's financial markets were the deepest. Its property market was one of the most liquid, and perhaps most importantly, its brand was unmatched. The US dollar wasn't just a currency, it was the world's currency. And for the wealthy, that meant safety. You could store value in US Treasury bonds, hold US bank accounts, and sleep well knowing that America's political stability and global dominance were protecting your money. The American legal system was seen as the gold standard, transparent, predictable, and fair, at least for those with the resources to navigate it. In those days, Singapore barely registered on the wealth map. In 1965, it was a struggling post-colonial trading port. By the late 80s, it had become a promising business hub, but no one imagined it could rival the financial pull of New York, London, or Zurich. The wealthy saw it as a convenient Asian stopover, not a final destination for their fortunes. But over time, cracks began to appear in America's financial dominance. And those cracks grew wider with every political, economic, and social shock. Enter Singapore, the new safe haven. Somewhere between the global financial crisis of 2008 and the geopolitical volatility of the 2020s, Singapore underwent a profound transformation. What was once a specialized trade and finance hub for Southeast Asia evolved into one of the world's premier safe havens for capital, a destination not just for businesses, but for the wealthiest individuals on the planet. For ultra-high net worth individuals, UHNWIs, those controlling tens or even hundreds of millions of dollars, Singapore now represents a rare combination of qualities that are increasingly hard to find in today's fractured global economy. The first and most important of these is political stability. In an age when electoral swings can radically reshape a country's economic direction within a single 4-year term, Singapore stands out for its long-term policy consistency. The government's model is often described as pragmatic authoritarianism, tightly controlled but deeply focused on economic performance and public order. For wealthy investors, this means they can plan decades ahead without worrying about abrupt tax reforms, nationalization threats, or populist backlash against the rich. The second is taxation, or more precisely, the absence of certain taxes. Singapore imposes no capital gains tax. If you sell a multi-billion-dollar company, liquidate a portfolio, or flip prime real estate for a massive profit, you retain the full amount. No complex IRS calculations, no capital gains bills. This, combined with competitive personal income tax rates that top out far lower than the US or Europe, makes Singapore structurally attractive for both entrepreneurs and established wealth. Third, the strength of its financial system. Singapore's Monetary Authority, MAS, enforces some of the most rigorous regulatory standards in the world, not to restrict capital flow, but to maintain trust. Wealthy clients understand that strong compliance frameworks protect them from fraud, market manipulation, and the reputational damage of being in a lightly regulated jurisdiction. This is why major global banks base significant private banking operations in Singapore. It's a place where money is both accessible and secure. Lastly, the rule of law. In Singapore, contracts are enforced quickly and without political interference. Property rights are protected with precision. Court rulings are respected regardless of the parties involved. For those managing intergenerational wealth, this legal certainty is as valuable as any tax incentive. The result is a jurisdiction that doesn't just attract money, it retains it. Once assets arrive in Singapore, they rarely leave. That's because for UHNWIs, security, predictability, and a transparent system are worth far more than a slightly higher return in a riskier market. The push factors from America. If Singapore is the magnet, then America is the force pushing the wealthy away. And that's a story that's been quietly unfolding for more than a decade. Only now, the signs are too big to ignore. It starts with taxation. In the US, the conversation about taxing the rich has shifted from political rhetoric to tangible policy. Proposals for wealth taxes, higher capital gains rates, and surtaxes on investment income are no longer fringe ideas. They're making their way into state budgets and federal discussions. California, New York, and other high-tax states have already seen an exodus of wealthy residents moving to Florida and Texas. But some aren't just crossing state lines anymore. They're crossing oceans. Then there's economic volatility. The U.S. stock market, while still powerful, has been rattled by sharp swings, from the pandemic crash to tech sector whiplash. Inflation hit 40-year highs in 2022, eroding real returns and shaking confidence. For investors with the ability to diversify internationally, keeping too much wealth tied to one country, even America, is starting to look like bad risk management. The US dollar, once seen as the ultimate safe asset, is also facing questions it hasn't had to answer in decades. The rise of competing reserve currencies, the weaponization of the dollar and sanctions, and growing US debt have led some ultra-wealthy families to think strategically. Maybe it's time to have a significant portion of assets in a jurisdiction that isn't fully dependent on Washington's monetary policy. And then there's political uncertainty. America's hyperpolarized political climate means policy swings are bigger, faster, and less predictable than ever. Tax codes, trade policies, even foreign investment rules can change dramatically with a single election. For investors thinking in decades, this volatility isn't just uncomfortable, it's dangerous. The result is a quiet but accelerating capital migration. Hedge fund managers, tech founders, and industrial magnates are moving parts of their fortune, and sometimes their operations, abroad. In recent years, several billionaires have relocated their family offices to Asia, not because America has collapsed, but because the risk-reward equation has shifted. In other words, it's not just about finding somewhere better. It's about hedging against a system that feels less certain than it used to. And that's where Singapore comes in, offering the stability and neutrality America no longer guarantees. 5. The pull factors to Singapore. If America is pushing the wealthy out, Singapore is rolling out the red carpet and doing it with precision. This isn't a country that stumbled into becoming a wealth magnet. It's the product of decades of deliberate policy engineering. One of the biggest draws is the Global Investor Program, GIP. It's a residency by investment scheme, but unlike the loosely monitored golden visa programs in other countries, Singapore's version is selective and strategic. To qualify, you don't just need deep pockets. You need to invest in ways that actively contribute to Singapore's economy, whether that's funding a local business, setting up a family office, or creating jobs. For UHNWIs, this means residency comes with the dignity of being part of a curated elite, not a buy-any-passport club. Then there's currency strength. The Singapore dollar is one of the most stable currencies in the world, backed by massive reserves and a central bank that takes a conservative, almost paranoid approach to monetary stability. For the wealthy, this isn't just about avoiding currency depreciation. It's about knowing that in a financial storm, the Singapore dollar is one of the few lifeboats likely to stay afloat. Safety and governance play an equally big role. Singapore's crime rate is among the lowest in the world, its infrastructure is world-class, and its bureaucracy is famously efficient. To a billionaire used to friction and inefficiency in other countries, this is more than convenience. It's peace of mind. And perhaps the most surprising pull factor? Real estate performance. In the last decade, prime property prices in Singapore have outpaced those in New York and London. Luxury apartments overlooking Marina Bay or Sentosa Cove aren't just homes, they're appreciating assets in one of the most supply-constrained markets on Earth. For foreign buyers, this combination of lifestyle and return on investment is hard to beat. Put simply, Singapore doesn't just offer a place to park money, it offers a system that makes that money grow and keeps it safe, in an environment that feels secure no matter what happens globally. To understand this wealth migration, let's follow one of its most visible faces, Ray Dalio, founder of Bridgewater Associates, the largest hedge fund in the world. In 2020, Dalio quietly set up his family office in Singapore. This wasn't a symbolic gesture. It was a strategic relocation of the very machinery that manages billions in personal and family wealth. And Dalio isn't alone. He's part of a broader wave of hedge fund managers, tech founders, and energy magnates making the same decision. Why Singapore? Dalio himself pointed to its location, governance, and financial ecosystem. From Singapore, he can operate in the same time zone as key Asian markets, tap into world-class banking infrastructure, and enjoy the legal certainty that the country is famous for. The fact that there's no capital gains tax didn't hurt either. The move also reflects a hedging strategy. By basing part of his operations in Singapore, Dalio reduces reliance on the US market and US politics. If Washington raises taxes or Wall Street hits turbulence, he has a base in one of the most stable economies in the world. And here's the kicker. Dalio's shift signaled to other wealthy investors that Singapore wasn't just for Southeast Asian tycoons. It was a legitimate alternative to New York, London, or Geneva for global wealth management. In the months following his move, Singapore saw a surge in applications for family office licenses, many from US-based billionaires. This case is the blueprint, a combination of strategic diversification, lifestyle upgrade, and financial optimization, all rolled into one decision. Hedge. For the ultra-wealthy, money isn't just capital. It's insurance against uncertainty. And right now, the single biggest uncertainty in the global economy is the US-China rivalry. From Beijing's tech crackdown to Washington's export bans, the two superpowers are locking horns over trade, technology, and currency dominance. For billionaires whose fortunes span continents, the danger isn't picking the wrong side. It's being forced to pick a side at all. This is where Singapore becomes invaluable. The city-state is one of the few places in the world that can maintain deep ties with both the US and China without alienating either. American warships refuel at Changi Naval Base. Chinese state companies list on the Singapore Exchange. Diplomatically, Singapore plays the role of a trusted, neutral broker in Southeast Asia. For wealthy investors, that neutrality is worth its weight in gold. It means they can hold assets, run businesses, and structure deals in a jurisdiction unlikely to get caught in direct economic crossfire. Add to that Singapore's position as a key maritime hub on the Strait of Malacca, through which about 1/4 of the world's traded goods pass, and you start to see why it's more than just a financial haven. It's a strategic one. In the last 5 years, Singapore has quietly overtaken Hong Kong as Asia's premier wealth management hub. Political unrest in Hong Kong, combined with China's tightening grip, pushed many investors to look for an alternative. Singapore's stable governance, efficient bureaucracy, and pro-business policies made it the obvious choice. For the world's elite, Singapore isn't just a place to store wealth. It's a place to protect influence, stay connected to both East and West, and hedge against the geopolitical storms that are only getting stronger. The most important lesson here is brutally simple. Wealth goes where it's treated best. It's not about sentiment, patriotism, or even loyalty to a home country. It's about where the numbers make sense and where the risks are lowest. Right now, Singapore is winning that game. It offers political stability, tax efficiency, and global connectivity, all wrapped in a business culture that treats investors as partners, not targets. Compare that to the US, where talk of higher wealth taxes, unpredictable regulations, and growing political division make the ultra-rich feel like moving targets. Over the next decade, the trajectory seems clear. More family offices will relocate to Singapore, particularly from the US, Europe, and China. Already, the number of family offices in Singapore has surged from just a few hundred in 2017 to over 1,500 today, and that's only the beginning. Private banking will expand even faster, with global banks setting up elite desks specifically to serve Singapore-based clients. Luxury real estate demand will intensify. Expect property prices in ultra-prime areas like Orchard, Marina Bay, and Sentosa to keep rising, outpacing even New York and London. But there's a risk. If Singapore becomes too dependent on foreign wealth, it could face the same affordability crisis that's hitting London and Vancouver, where locals are priced out and the wealth gap widens. The government knows this, which is why it's tightening property ownership rules and raising stamp duties for foreign buyers. The bigger question is, how long can Singapore maintain this balancing act? Staying neutral in an increasingly polarized world is getting harder. If the US-China rivalry escalates into economic warfare, Singapore will face pressure to pick a side, and that could change the equation for investors overnight. For now, though, the message from the world's richest people is loud and clear. In the great global wealth migration, Singapore isn't just a stopover. It's the destination. Conclusion. In a world where capital moves faster than ever, loyalty is a luxury and money has none. The ultra-wealthy aren't packing up their fortunes out of whim. They're making cold, calculated decisions about where their money will be safest, grow fastest, and face the least resistance. For decades, that place was America. Today, increasingly, it's Singapore. It's not that the US is collapsing, it's that the rules of the global game have changed. Taxes, political stability, geopolitical neutrality, legal certainty. These are the currencies that matter now. And Singapore, a tiny island nation with no natural resources, has somehow mastered them all. Maybe the bigger lesson isn't just about money. Maybe it's about the power of design. How a country that plays the long game, prioritizes trust, and understands the psychology of its stakeholders can outperform even the giants. The question is, will the giants adapt? Or will they keep watching their wealth and influence quietly sail away to a little red dot on the map?